Yeah, very good.
Yeah, perfect. All right, welcome back, everybody. I hope you had a wonderful lunch in the sun. Finally, there's a little bit of sunshine here in Switzerland. We have a wonderful keynote here for you today from Cardano. Both Frederik and Sandro are going to be talking about environmental sustainability and the blockchain trilemma. So, stage is yours.
Thank you very much, and thank you for being here in our deep dive. What we wanted to touch upon today is there's really two fundamental things which is happening in blockchain right now, specifically when you look at the board level and when you look a little bit beyond crypto. So the first thing is blockchain environmentally sustainable? And it's a big question which really parts the waters. The second thing is really around the economic sustainability of it. A lot of the blockchains and the layer 1 protocols out there, they have some embedded features where they kind of run out of incentives over time. So we wanted to give you kind of a deep dive into how does it actually look with Cardano? Is that the same you need to worry about? What kind of questions do you need to kind of cover when you're looking at these layer 1 protocols? But also to give you an opportunity to ask some of those tricky questions so we can get some of this discussion going, because nothing is really certain, but what is certain is that when you think about it, when you really hardcore come down to it, everywhere you go, trust is probably the only legal performance enhancing drug. Everywhere where there is trust, good things happen. If you think about a city, if you are safe in the city, you would do commerce. If you're able to actually interact with the city and there's sewage channels and there's infrastructure, good things happen. Parks are upspringing, the children are playing in the streets, you can build up a career, you can take care of your family and so forth. It's all coming back to trust. Now, in the last couple of weeks, we've seen that there's been some questions around, can we trust crypto? Can we not trust crypto? And I think we need to look one step beyond that, because when we actually look into it, at least what we saw in the last 2 weeks is you can definitely trust the underlying blockchains, but some of the incentives you might need to look at. So after some 9-10 years in working around blockchain and crypto, I'm finally at a stage where I'm ready to say, not just crypto is open for business, but blockchain is open for business. With that, I would like to give the word to Sandro, who will lead us through the rest of the show. And, questions, comments, be direct. Let's answer some really cool stuff, okay? Go for it.
Thank you, Fred. Thanks, everyone. It's great being here. Thank you for attending the session. To start off, just quickly, there are various different kind of layer 1 protocols, and as you all know, there is the public and the private space, and depending on the projects, you may go for a permissioned private blockchain when you look at the close membership to attend. What we at the Cardano Foundation are, and what we are working for, is actually the adoption of a permissionless public blockchain. There is a lot of discussion when you talk about permissionless, permissioned, what does it actually mean, where it starts and where it ends. So to us, the idea here is that you have no barriers when you enter the ecosystem. So when you hold a utility token, you can actually participate in staking, you can participate by voting, and you can use your rights, your utility in the ecosystem. You can see a lot of proof-of-stake protocols where you have an entry barrier which requires a certain amount to actually run a stake pool. So it's probably still kind of permissionless in a sense that you don't have to apply for membership, but there is a certain limitation for you to run a stake pool. And these are kind of things you have to consider when you choose the layer 1 protocol you're going to work with. So in a permissionless public blockchain like Cardano, we are open source. We actually have our data online accessible for everyone. And then the question comes, what is the value proposition? So our value proposition is not technology, because you can actually copy our technology. There are a couple of proof of stake. They use our consensus protocol, Ouroboros, and working with that. So there is a variety where you can see, okay, how do you actually define what is the value of a blockchain? So with us, we have a great community. So for us, it is really who builds and who trusts into Cardano. What can we see with the so-called blockchain citizens, which are utilizing and which are developing on the blockchain and drive blockchain adoption? So when we look at it and we go through it in different use cases, you will see that there is a lot of power within the ecosystem, within the community, to make a blockchain successful. And on top of this, it's obviously the roadmap. So what are actually the goals you follow, and what are the milestones set? You may all have heard about the blockchain trilemma, scalability, decentralization, and security. So how can we combine these 3 pillars to ensure that we have a sustainable protocol going forward, not for the next couple of years, but for the next 30, 40, 50 years, so the decades to come. When we talk about decentralization, we touched base before a bit. So what does decentralization mean? Decentralization is actually the fact that we allow anyone to access the protocol and that we can create a security layer by preventing an attack that someone takes over the protocol, be it a 51% attack or so on. You will see details on this, how it is being done going forward. So what is the first thing to look at? It's actually the protocol consensus. So as you all know, there are different ways how you can actually validate or mine a block. So we have the proof of work, we have the proof of stake, and I want to go quickly into detail what is the difference when you talk about environmental sustainability. In proof of work, it's a race for the best. So I do want to mine a block, so do you, do you, do you. So to win this race, we actually have CPU power we increase. So I'm buying more and more CPUs to increase my CPU power to actually resolve this mathematical equation. So this is then when you see all these mining farms running, using a lot of energy, which is from an environmental point of view, not sustainable. We can talk about it, how the electricity is being consumed. That's not all bad about it. We can compare it to traditional finance. It's not as bad as it sounds, but this is where the discussion starts. And so then we have the proof of stake. So we have a different consensus protocol. It's not working on the CPU power, but it works on the stake you hold in the ecosystem. So every one of you, even if you just hold a couple of the utility token, you can participate, you can stake, and you can take a vote into the ecosystem. It's actually a lottery. You can choose like a lottery. So if all of us are having ADAS, the lottery goes through and decides now it's you can validate this block. So now it's probably not you and me who can do it or who wants to do it, have the time to do it, but we then can say, okay, we're going to delegate to a stake pool who's doing it for us. To operate a stake pool, there is not much of requirement here, so you need a little bit of hardware, you need a computer, you need to get access to the node, but you talk about a couple of $100 to actually facilitate this. So this is really open for everyone who wants to do it. What is important is how can we, and we talked about this decentralization, and we're talking about attack mechanisms. So the delegation, how it works with Cardano, it's quite unique in a way that you actually don't have to pledge your assets to the stake pool operator, but there is a so-called delegation key. So the protocol recognizes your delegation key, that you delegate your assets to a stake pool and adds that to a stake of the operator. So the chances for the operator to get chosen by the lottery increases. You remain keeping power of your assets. So it means your assets can always be transferred, can always be sold. You don't have any issues, or you don't have the risk of the so-called slashing, as you don't pledge your assets to the stake pool operator in case he misbehaves. This is quite unique and gives a lot of benefits to any financial institutions, but also the retail clients who are working with the assets. To actually prevent attacks, when we talk about this 51% attack, so in a stake pool, the more stake you have, the bigger is the chance you get chosen. So now you can say, well, if I have half of the supply in my stake pool, I can take over control. So how is this being resolved? This is being resolved with the mathematical formula, with the K-level, as it called. And today, this K-level is at 64 million ADA. So it says what is the optimal amount of stake pools to be operated to actually support the ecosystem. And this is divided to the supply. So today, it's 64 million. That means that when you have a stake pool on the saturation level of 64 million, you have the perfect saturation, and the chances to get chosen is the biggest. Everything what exceeds 64 million will not be considered to be chosen, but you will have to distribute to more delegators. So that means that actually the amount of rewards for you are going down if you exceed the saturation level. And so can we prevent that a stake pool is getting too big. In course of time, it's also considered with the ecosystem to see does the saturation level needs to be adjusted or not. This depends on the development. Then, so the staking advantages is there is a secure protocol, which is based in Haskell within Cardano. It's actually decentralized through all these stake pool operators, and it's energy efficient. And this is one of the key elements we're going to look into when we then as well talk about circular economy. So we can start with what do we require to actually run a protocol, and then how can we offset the same, and how can we help by actually create accountability to come. It's more cost efficient actually as other protocols you may know, depending on the architecture. This is also something I want to go into when we talk about economic sustainability. And then there is this increased competition. So the entry barrier is low, as I mentioned. You can, with a couple of $100, come into and actually create a stake pool, and this gives competition with each other. So stake pool operator can decide how much fee he takes. So the more competition, the cheaper it gets for the users. But there's also another side when we talk about environmental sustainability, and this is something which we see with the blockchain community, is actually that they are very willing to actually change the world and have an impact. And we have the so-called, we have stake pools which are purpose-driven. So those stake pools, when you delegate to those stake pools, they're taking a higher fee, but the fee they take, they are actually donating to charities, let's say Save the Children or reforestation. So there's actually a way for you to actually delegate your ADA, and the rewards you receive, you can say, I'm happy with a certain amount, and the rest I do directly put into charity. So with this, you don't have to take into your pocket and pay the charity, but you just actually waive a part of your rewards, or you can even waive all of your rewards with certain mission-driven pools. So a financial and social operating system which allows you to represent actually value, identity, and governance all in one place. This is the key element when you look at blockchain and what you want to try to achieve here. So what is Cardano? For those of you who do not know, so it's the first decentralized, permissionless blockchain and crypto project. It has been created by Charles Hoskinson, a co-founder of Ethereum. And actually, what he did, he looked at the first generation of blockchain, the second generation of blockchain, and recognized there are a few things we have to make different. One of the key elements, so what you can see when you talk of environmental sustainability, is move from proof of work to proof of stake, but then also in the architecture layer, how can we be more flexible rather than having in the first generation only the value of a financial transaction, and in the second generation, a transfer of a value transaction and a smart contract. How can we be more flexible in the architecture by having two different layers which allow also assets direct, like the native assets as our utility token, which allows metadata to put on, and you don't have to write a smart contract for the same. Then when you look at the roadmap, I'm looking at the time, good. So when you look at the roadmap, how it is being built or what is being done. So it started actually with the base layer. So we have built the base layer for Cardano, and that was really centralized because you have to create the value. And then we moved on with the Shelly. It's on this side here. So with the Shelly hard fork, where it said, okay, now we roll it out to the stake pool operators, to everyone, to creating this decentralization and the treasury built in. On a second hard fork, you see Kogan utility that has been last year. What happened here is actually we implemented the technical capability to support metadata, multi-currency, and smart contracts. So this is available and ready now. Many people from time to time are claiming it goes too slow. But what is the key when we look in an environment you want to build trust in? It needs to be stable. So the way it is being built, it's academic research, and everything is actually put open source for everyone to look in and to use as well. So after building the technical layer, which is proven, we go now into this phase where we increase scalability. So when you think back to the Trilemma, we have the security layer, we have the decentralization layer, and now we're going into the scalability. So how can we get there? This will come with the Basho hard fork in pretty soon. The Basho will then actually allow, so it's intended to happen in the next weeks. So with the Basho hard fork, you will actually see an increase in interoperability in scalability. That means that we're going to change the way the blocks are being processed. There will be a pipelining, there will be an asymmetric way how it's being done. And you will also see not only layer 1 applications, but also layer 2 applications. So everyone who builds on the blockchain are building new ways how you can actually aggregate transactions and bundle them to be more efficient on the blockchain. So scalability is one of the key elements when you also talk about interoperability. So there is interoperability already happening between different protocols, such as Ethereum and Cardano, with layer 2 applicators who actually just last week it has been announced that this actually that there is a layer 2 application allows stablecoin conversion from Ethereum to Cardano. So interoperability is one of the key elements here, which is coming. At the end of the day, you will see Voltaire, the governance, so the voting, the treasury, the sustainability, everything shall be outsourced, let's call it outsourced, into the broader ecosystem. So there is no centralized authority or organization building on Cardano, but it's you, it's the users, it's the ecosystem driving this. To achieve this, this is a long road to go. There is a lot of open source projects being worked on, but this is the ultimate goal to go. So I said a bit about the blockchain architecture, the Cardano settlement layer, which allows actually the settlements and the native assets, and the computational layer, which is required for the smart contracts. And important here to say as well, when you compare the first generation and the second generation of blockchains, you may know that Bitcoin is built on a UTXO model, and the second generation, like Ethereum, is built on an account-based model. So account-based models helps you actually to implement the smart contracts, and what happened with Cardano is we have combined the best of both worlds. So it's a so-called extended UTXO, which is a UTXO model allowing actually data in the output to actually create the input and the output to create smart contracts. So what helps a blockchain to survive? We have heard it from Fred in the intro. What is the incentive? We're talking about that the stake pool operator and anyone who delegates receives the token as a reward for the work they do on the network. So here we have to think further. So how can we maintain this going forward when we talk about a limited supply of the total supply? So a society grows great when old men plant trees in whose shade they shall never sit. And this, we hope we can sit partially beneath it, but what we do is actually we look for the next financial and operating system for the generation to come. So we are building the base layer for our future children, the teenagers, and you sitting here to actually benefit from this. So to achieve this, we need to build trust layers. So when you look at the left-hand side, we have the digital ID, the KYC, the KYT, the know your transfer, know your client, the forensic tools. What we need to achieve is actually that when you use blockchain, when you use crypto, that you can actually adapt it into the real world as we know it today. Because for most of the people, they're saying it's a Ponzi scheme, or there is a lot of money laundering and so on. So how can you prevent this from happening? It's actually, we need to have this trust layer built, which we are working on with our layer 2 application developers, that actually we can then move on to the integration layer when it's like, okay, we have a decentralized exchange, we have the wallet providers, we have the custodians. A custodian needs to get regulated, so how can they access the transactions to actually validate transactions, not validate transactions, the transaction itself, but validate that it's not related to AML. So then you have the forensic tools playing into where you can visualize the whole transaction history. You can go back to the genesis and you can see where does it go, where does it sit, on which address. And this gives you a lot of power actually to prevent in the future crime. When you talk about AML today, most of it is actually being still in cash sits and not in crypto. And the technology allows a lot of possibilities to prevent this, but we need to have the regulator, and this is where we have the international standards and governments model here. We need actually the cooperation with the regulator and the international standards that we can apply within the whole value chain. And from here, we are moving into this middle sector where we have the financial services. And when we look into financial services, when we talk about economic sustainability as well, what does it mean? How can we actually be more efficient? When you just think right now, it's so good to be out again and be in a conference, seeing people face to face, not only sitting in front of the computer. But how did the pandemic start? Or when the pandemic started, actually, we have seen a lot of issues due to the high volatility. When you talk about central banks, you talk about any intermediary, is it a CSD, an ICSD? I've been working at the financial market infrastructure back then, and we had a lot of issues with the collateral management because the markets go crazy. You have to transfer assets, and you have to transfer as well the underlying currency. So the currency, as you know it today, they have a cutoff. So when you want to transfer between banks, you have the intermediaries and you have cutoffs. So that means that you are limited in a way how you can manage your collateral. With actually blockchain, as it is immediate and you don't have cutoffs, it's 24/7, allows you a much more efficient way how you can actually do your collateral management. So this goes into the settlement layer, this goes into the treasury collateral and to the risk management. We can look back at things as well when we talk about issuing as an example. When you issue a product today, how can you issue a product efficient? You have an issuing agent, a paying agent, a lead agent. There are various different parties involved. How can this be in the future be done more efficient. And this is when we look at smart contracts, at programmable solutions. When you talk about energy consumption, you see here that actually on the graph on the right-hand side, the VisaNet, traditional financial industry is very fast. Blockchain, which is in the middle on the left-hand side, it's not as fast as traditional finance today. But we are getting there. Now, the difference between the protocols you see here is a lot about how it's being built. So everything which is being built on a private permissionless blockchain, as an example, can be pretty efficient, like a Hedera hash graph, because it doesn't require the key ecosystem, but is centralized again. When you talk about Cardano as a public permissionless blockchain, you see we are somewhere in the middle, a bit on the left-hand side, but with the upcoming hard fork, you will see that we're going to increase actually the transaction per second. But one very important aspect here to mention as well, it's we do not only talk about transaction per second, but put through per second or per transaction. So what is the value you have in a transaction? Is it a financial transaction? Or does it include metadata? Does it include smart contracts? So you can transfer much more value than a simple financial transaction. And how are you being rewarded to validate a block? We have heard it at the beginning speech from Fred when he said, how can you make this sustainable when you run out of your reward pool? So at the Cardano, we have a 45 billion cap of ADAs. There is 14 billion in the reserve. And when a stake pool operator validates a block, he's getting his rewards, and the delegators are getting their rewards out of this reward pot. And the reward pot is actually filled by the reserve, but also by the transaction fees. So ideally, the reward pot can be filled with transaction fees only. How can you achieve this? How can you actually fill a reward pot with transaction fees without having tremendous amount of transaction costs? So you don't want to increase the fees, right? So you say, we need to get somewhere where we can actually have more transactions, more value in the transactions, without increasing the fee as such. And the answer to this is actually that you build a system where you have a predictable solution. You see protocols out there which are not predictable, where you don't really know what you're going to pay for, and this is actually no enterprise-grade solution, because an enterprise, a financial institution, needs to know how much do I pay for it. So the solution we see here is actually you have a base fee, which is you have the base fee preventing DDoS attacks, as you see with other protocols. When they go down, often it comes to DDoS attacks. Touch wood, we have never been down so far, and this is for us actually stability, which is key, important for us to achieve. And on top of that, then you have the second component, which is based on the bytes you put on. So how much information you put onto the transaction? Is it a simple financial transaction? It's a very low cost. Do you put on metadata? Do you put on a smart contract? Whatever you put on, the more expensive you get transaction, but you have more value in this transaction as well, which makes sense. And by increasing actually the amount of transactions with metadata, with smart contracts, we can increase the transaction fees which are feeding into the reward pot. And here it's a small graph where you can see how it developed for Cardano. So on the left-hand side, you can see that the majority have been simple transactions, a financial transaction which does not really include a lot of data. And in course of time, this has changed. So we have a lot of metadata there. We have a lot of smart contracts, and this is to get more and more. And this is how we can actually ensure that we have an economic sustainability and that the protocol works for the next 20, 30, 40 years without increasing the supply. So Cardano as a trade tax solution platform, we are looking for interoperability, accessibility. That's important when you talk about inclusion. So who can access your platform? When we talk about 2.5 billion people without a birth certificate. If you don't have a birth certificate, you don't have a bank account, you don't have access to health insurance, you don't have access to education. How can people without a birth certificate, without a passport, get onto a financial system? Blockchain offers a solution to this by actually having these non-custodial wallets where anyone who has internet access can access the network, and by accessing the network on the layer 2, going further in the future, accessing other tools such as education and healthcare. Auditability, it's a big question. How can we make sure that the data which is entered is correct? At the end of the day, there's always a human who makes the initial entering or the initial coding. And auditability is something which is guaranteed due to open source data, so data is accessible for everyone and can be validated, but it's also working with all those auditor firms, be it the known Big Four or big smaller ones, helping to actually trust and build this trust layer on top of it. Sustainable governance, when you talk about circular economy, I'm coming back on this, it's about creating accountability, and this is something very important when we really want to have an impact and change the world going forward. So the circular economy, as I mentioned, is how can we actually have a working circular economy? To those of you who heard about that, it's actually about not only doing this ESG side, so not only offsetting carbon, but changing the industry in a way that less pollution, less waste is being produced. And to do so, we have to create accountability, because if you can't tell who is responsible for it, people won't change. It's a sad, but it's a pure fact. And we have to learn as well, so we need to get transparency. What does manufacturing mean, and what is being actually, what are the resources used for it? I learned it myself when I bought a jacket a couple months ago. I think last year I saw there is a jacket made of 20 or 26 bottles, so PET bottles, and I thought, wow, that's just recycled, that's great, it's good, I'm gonna buy this, and I have a good feeling that I've done something good for the environment. Later, I started doing some research, and I learned actually that to manufacture such a jacket out of plastic, to actually the way to get to this final product, uses a lot of energy, and this includes a lot of waste. So now you have to compare, well, what is the better solution, synthetic or PET? I cannot tell you right now, but I need the data to know this. And this is why accountability and transparency is so important for us to create this change and have a sustainable economy here. So programmable transparency is our answer to this. And how have we done this? There was an example, or there was a use case we have done last year that we partnered up with Veritree. Veritree is a Canadian-based reforestation agency, so they do plant trees to offset carbon. As we all know here in Switzerland, you can buy clothes, you can drink a beer, you can do a lot of things, and they promise you they're going to plant a tree, but you never know what's actually going to happen. Or you will get a certificate by email or even physically saying, this is the tree you planted, there it is, but this can be actually being multiplied. So someone can take a copy, and I give it to you, and I give it to you, and I give it to you, and you all have the same tree, but you have a certificate, it's yours. So there is actually no proof that this tree has been planted or that you are the unique owner of, the sole owner of the same. So what we have done with Veritree is we put actually the record on the blockchain, and we challenged our community, because the blockchain community is claiming to be environmentally sustainable and they want to have a positive impact. So we asked our community to actually donate 1 million ADAs to plant 1 million trees. And with this, we do want to fight greenwashing, double counting, build traceability, and follow-ups. So how does it work? You're donating, in this example, you have donated 15 ADA to actually plant 15 trees. For this, you got a coin, which confirmed you have done your donation. Once the tree has been planted, you can exchange your coin for an NFT, so a non-fungible token, which cannot be copied, so there is no double counting, and this NFT contains the exact GPS coordination, the type of tree, who planted it, and a lot of information about what is the impact of this tree at this geolocation over time when we talk about the offset of the carbon. So what is the impact of this tree? And this is, for you, extremely good to know, because you know this is my tree, which is immutable on the blockchain, cannot be copied to anyone, so you know what happened. And you can use it when you talk about industries and enterprise, you can use it for ESG. It gives you the first time actually a reliable ESG report, which gives you an exact number, what is the impact of your trees. So in our example, we planted the mangrove trees in Kenya. So mangrove trees do not only offset carbon, but their roots go into the sea and provide nutrition to fish, so we can bring the fish industry back. So when you look at villages which do not have access or which actually have to leave their houses due to rotting of these mangrove trees, they lost fishing, that is their food, that's their industry, they haven't had anything less, so they have to leave their homes. By reforestation there, you can bring back the people to their original home, you can give them food, and you can give them an industry to live off, so you can really start building something. And this is only possible when you can have this accountability that what we are doing is being done, and it's being done right. So it's for me as well a great achievement that we have seen that Veritree attracted Samsung as an example, which has started planting a tree of I think it was with 2 million trees they started off in January, and there are many more to come. And all these things are on the blockchain, are on the Cardano blockchain, and this is where you see in the chart before, this is where a transaction gets more metadata in it and increases in value. So for us to get carbon neutral, you can see what we actually produce today. It's 2.7 thousand tons of CO2 per year, which is equals of 218 beaches of trees. It's required actually to offset. As said, we have asked our community. It took us 3 months to get the donated 1 million trees. So this is a big hand for our community that they actually participated. And it's not 2 or 3 big donors, but it was really small donations from 15 to a couple of hundreds and some few thousands of trees we have received to actually get to this 1 million tree. And with this 1 million tree, we can guarantee that Cardano will be carbon neutral in the future. Why do I say will be, and why do I say we do not claim ourselves on our page now as carbon neutral yet? Because those trees have to grow. Those trees have actually to work like we all do. And then there is another aspect that we are working closely with universities to actually elaborate right now the energy consumption to keep the protocol up and running. So what is the energy consumption of the stake pool operators? And I really hope that we are soon there where we can give you a trusted source to actually prove that blockchain is not an enemy of the environment, but a friend of the environment, and can help us to be much more efficient in many processes and actually helps the economy and the environment to be better in the future. Yeah, doesn't work good. So as said, one of the key elements with Veritree we had was the double spending, the lack of transparency, lack of community involvement, lack of data feedback loop. That's another point. You never know what happens once the tree is planted these days. This we can change on the blockchain as well. And you haven't had a standard in the past. This is important when you talk about ESG reporting. So how can you work with that? Good. Perfect. So with this, I think we can open the Q&A session. Cardano is open for business, and I really hope that I see many of you or hear many of you in a call or in a physical meeting to actually build as a layer 2 developer or as an industry leader on our blockchain to change the world for the better. Thank you.
All right, don't be shy. There's a lot of information out there. There's a lot of questions to be had and asked.
Yes.
Veritree project was an amazing success. Well done. So what's next?
Thank you for the question. So Veritree project was a great success. What's next? Question from the audience. Thank you so much. So what's next? What we are taking as an outcome of the Veritree project is, as an example, we are talking to many impact investors. Impact investors see with the Veritree project that they can get transparency and traceability into the outcome. So now when you look at an impact investor going into renewable energy as an example, what does it exactly mean when you invest into a company which is doing, be it solar or be it water, whatever it is to create energy. So what we are looking right now, it's a couple of impact investors to actually measure the data from those renewable energy providers, measure the data output, so what is being produced, what is the output, what is the leftover, and then go back to these actually providers to say how they can be more efficient. So that's our accountability towards the producer, but also it's for the investor to have a tamper-proof solution. What is actually my investment invested for, and what is the outcome? So this is one of the examples.
I think the main problem you want to solve on the blockchain is to lower the cost of transparency. In many NGOs and in many large businesses, the cost of transparency is simply just too expensive. So if you are the main contributor, the principal behind an investment in Africa, you will get your answers. But the 10,000 followers, there's just no resources for that. So what we really wanted to do with Veritree was, yes, it was really nice to plant 1 million trees and to see all those things. It was a really good use case. We really wanted to show that the costs of transparency can go, incrementally down, and that we think will change the way people interact and act when they commit to the global society on planet Earth.
Yeah. Here we go. So the question is on the trust layer side. So on the trust layer, if those boxes we have on the trust layer, if they are being, can you repeat the question there?
So that trust layer,
Yeah.
these are your own processes, right?
No, it's not our own processes. These are the fields we have detected to being touched on.
So if you think about it from the other perspective, the question goes around, so how much KYC, AML, and standards is built into the blockchain from start, if I understand it correctly? So what we've been doing a lot in Crypto Valley has been building a value proposition around cryptocurrencies and DeFi and other existing models, which works, we know them very well from banking. We're now just using a different infrastructure for it. And we're now fighting a little bit about, where is the standards and how far can we go and what is decentralization. What we're really speaking about here is, if blockchain is going to go out to the masses and become the new infrastructure of the internet, a new cybersecurity layer on top of it and change these behaviors, what you really need to think about is that there's a value capture layer where people is going to monetize it, and there's a value creation layer, which is an infrastructure layer. Like I opened up today speaking about the city with the sewage system and with the internet and safety. Now, in between that, there's a wide open gap. And that wide open gap is covered by a lot of industries today, because what's happening today already is that you have a company and they're accessing a centralized database. And to do that, whether they're regulated or not, they're using intermediaries. And that can be SAP, it can be Oracle, it can be Temenos, it can be Abacus, it can be a lot of those systems. And to get to a real utility adoption of the blockchain, not just the crypto, what you need to do is you need to cover those fields. Now, some blockchains cannot do that because there's not sufficient data which are available to be stored on the blockchain. So you need to work with centralized servers around that, and you need to build bridges. Other blockchains have a better functionality to do that. But what is between every single box there is a billion-dollar legacy business who today lives from connecting a business model to a database layer. And what we're trying to say is that this is the ones where we see the adoption coming from next time. This is the ones where we either, from the blockchain industry, need to kind of build enough, scratch your own back so you get rich kind of thing, the startups, or the existing ones, we need to show them how do you mitigate that trust layer. Because it's not a blockchain problem actually in there. It's a societal system problem which we use to work on. Yeah.
All of the tree solutions that you're planting trees with the NFTs, can that be taken into properties, for example, building houses for communities or doing something different than building just trees?
So what's really interesting about that is that most of us, how many is familiar with a non-fungible token today? It's like in the old days when you ask how many is buying crypto, right? So what's interesting is that a non-fungible token doesn't really have a standard. There is one standard we list on Ethereum, which is really solid, it's very well defined, and most people say, oh, that's the global standard. So there's a few things around NFTs and the use cases around NFTs you need to be aware of. So what we wanted to show from a technical perspective here with these NFTs is that they're actually not a real NFT. So they have non-fungible features built into it, but compared to a normal NFT on the ERC standard, it doesn't point to a centralized database. So we actually put the regulatory information inside the actual native token. So compared to Ethereum, where it has to be living in a smart contract, who then points to a centralized database or a decentralized one, unfortunately today is mainly a centralized one, this is actually a native token where the metadata lives on the blockchain with the regulatory information, but also the geo-tracking information. So if you move that into another world where we can think about title systems and homes and so on, it actually gives you an incredible advantage, not just in terms of the transaction cost, but in terms of how you maintain that data and the immutability of the non-fungible part of it. So yes, you can absolutely do that. And we encourage people to play around with that because I think the real NFT standard and use case has not really been proven yet. But what we see is that there's a huge growth in terms of how to do it. And I think the how is really important because that's where the trust lies. There's a great article from Moxie, if you haven't read it. We can put it into the notes, which really talks about the current NFTs today and how they actually work. So if you move it from one wallet to another wallet, what you actually see is the NFT is changing. So if you think you're buying a JPEG, right, and you're now the proud owner of a JPEG file, right, what actually happens if you move it from MetaMask to another wallet, the whole thing changes. And you have to ask yourself, so what do I own, right? And there's a difference between how Cardano NFTs, but also other third-layer blockchain NFTs are working compared to the ERC standard there. And that peculiarity is extremely important to understand. It is clear that the highest distribution is still with Ethereum, but your housing case doesn't really work that well in an ERC format, but it works very well in a Cardano NFT, but it actually also works very well in a Tesla's NFT and another couple of those blockchains.
So, can I?
Yeah, sure.
So yeah, it's actually, it's an easy way to point finger, right? When you look at Bitcoin, which solves the issue that you have intermediaries in between. So you have a peer-to-peer, so it's you and I, we transfer money. There is the Bitcoin network, so we can easily measure, you can point finger on one single network. When you compare a cross-border transaction these days, when you want to transfer, if I transfer US dollar to the US. I mean, that's a very simple and common transaction, but it's not my house bank transferring to another house bank via the SWIFT network. It's my house bank going to a correspondent bank. The correspondent bank, there's a clear in between, have another correspondent bank. So it's not that easy to actually point finger on what is the actual energy consumption in today's world versus Bitcoin is quite simple to do so. So I think that the impact, or when you look at Bitcoin to store value, is still, it's a great value proposition you have at Bitcoin, and the way it is being done, yes, it's like when you look at gold, right? It's how sustainable is gold when you look at how it's being mined and so on. It's a simple way to point fingers on in the media, and that's really my personal opinion, so not Cardano opinion, but my personal opinion here is as well that the industry today doesn't want to see this fast development in blockchain, as it does reduce their power when you go from this centralized into this decentralized world, and hence there is a lot of counterfight coming from the industry which exists. So.
Education. I mean, yeah. The numbers just came out for the Joe Biden administration, right? So it's about 13% of all adults in the US, they either own a cryptocurrency, been interacting with the cryptocurrency, or has been holding one, right? And how many of those actually know what they've been holding? How many of those actually interact with the blockchain? How many of those actually does something which is beneficiary for the ecosystem we built up here in Crypto Valley? Well, probably very few. So I think if we really believe in blockchain and we really believe in crypto, we need to start talking more about what use cases can it solve? How does it actually work? Why is it better, and is it really better? Instead of talking about, oh, that one goes up with 10%, and here I have a 50x return. Because in what other industry do you have an opportunity to buy something for $1 and lean back and think you'll be a billionaire? Right? It doesn't work like that. Right? And very few people had the opportunity to do that in crypto, but very few people actually takes that fight out there and engages with the journalist and starts speaking about the carbon footprint, who actually understand isometric encryption sufficiently that we can speak about state channels. And I think most of us who's been in the Crypto Valley for a long time, we're kind of naturally interested in that. But we need to open up and start interacting around utility and not just crypto. So the finger goes a little bit back to us, I have to say. More of you are needed out there to take that fight out there. Energy consumption is not really bad per se, right? And if you look into the numbers and the statistics, as an economist, you can look at both sides, right? I mean, it's very interesting. Actually, you will probably get a lower energy consumption faster by feeding the world's population than you would do by actually banning carbon emissions. And we know this for a fact, but it's not very popular to write about, and specifically not in a global, food crisis and a global energy crisis we're in right now. I mean, that sells a lot more newspaper articles. But if we have the ability to feed the people around the world, we have much more brains, we have much more people who actually can, take care of themselves from an economic perspective, which means they get education. When they get education, they start asking those questions and start coming with solutions. Right? So from an economist perspective, it is a little bit odd what's going on in the media. But unfortunately, it is what it is.
I'd love to hear some use cases from digital identity and access to digital assets in Africa development context.
Yeah. So we're looking at a whole set of different use cases on digital identity, and digital identity is a difficult one. So one thing is that the technology can do it. The other part is who's going to accept the identity, and that's the harder one. So we started out a little bit in the easy equation. So for instance, with university records and student records. So we've seen that a couple of countries, and specifically around Africa and Southeast Asia, they have a lot of turmoil, which is obviously from a business perspective not very nice to deal with. But that also means that it's very hard to understand and to verify student credentials. So if somebody says, I have a university degree from University of Uganda, or somebody says I have from ETH in Switzerland, we are not blinking twice. We trust ETH, but we don't necessarily understand or are able to verify Uganda. So the whole idea there was, if we can give students a way to verify that they went to school and they actually graduated, we will be able to port the labor over the borders, which gives portability of labor force, which also allows them to move away from a crisis zone. But obviously, it's really hard if you work in an environment where there is a civil war going on and interchanging regimes, right? But if you go into Switzerland, we don't really care, right? We have a stabilized way of identification. It's universally accepted. In Scandinavia, where I'm from, the government basically says this is what we use, and everybody's now using that. So we have a 99% adoption on it. But when you flip that upside down and say, in the Western world, we base everything on a birth certificate. According to the United Nations and the Sustainable Development Goals, that might not be the best way of doing it, because if we wanted to give the 2 billion people who don't have a birth certificate, we would probably have done it. And that seems to not be the case. It's not really shrinking that population part. And that basically hinders them from interacting with global markets, including the internet, right? So they can basically read, write, share, but they cannot do any commerce, and they cannot be a consumer for us. So the other use case we're looking at is specifically Kenya. And Kenya has some really good regulation and it's fairly stable. And the idea is that you can build a self-sovereign identity to get a microfinancing or get a mini mortgage, so $100 mortgage. $100 mortgage normally in Kenya is about 600 to 700 basis points, which for most of us is ridiculous, right? But if we here from our world can sit with our crypto assets through an initial stake pool offering, right? And we can give a micro mortgage to a population of, let's say, 10,000 people in Kenya. That means that the risk is spread out fairly evenly. So if a couple of them, don't pay back, that's okay. But we can track every single time they do pay back. And every time they do pay back, we actually see them like your eBay account, right? And they get a different credit rating. And that credit rating can be used through an NFT, right? Because their NFTs can be used as an access. So this basically is it's like an identity online, right? It's a non-fungible token who acts as an identifier, right? And that gives us then the ability to say, okay, then we can lower the rate from, let's say, 10 basis points or maybe 50 basis points or whatever that number is, and then lower that down because we can see that they actually are paying, right? Now, that doesn't mean that they will always keep paying, but it means that we can actually get distribution through a different kind of identity system, which is very close to being self-sovereign in that case. So that's why they range. But the problem is digital identity. And it's really, really a hard problem. Technically, very easy, huh? But social and culturally, very hard. So we have about 2 minutes left, so we could take one more question. If not, then I have a question for Sandro. Oh, there we go.
As far as I understand, development for Cardano, what are you doing to grow your developer ecosystem, especially since a lot of it is in Africa or where maybe they don't have access to the same levels of education?
So I'll repeat the question so everybody can hear it. So what are you doing to grow your developer system, developer ecosystem, specifically because you've chosen Haskell to be at the foundation of the Cardano blockchain? And Haskell is it's a very difficult programming language, and it doesn't have a large adoption in the mainstream programming. Is correct? Yeah, I can go ahead. So we're doing multiple things. So first of all, we would love that there becomes more clients. So we're actually working with a couple of companies to do a Rust client, and we do think there will be a Java client and so forth over time, and that's going to be a good thing. Then secondly, we have EVM compatibility, right? But it doesn't really solve the real thing. The reason why we chose Haskell is because the formal verification methods, which is what you really need if you want to put real value in a blockchain. I'm sorry about putting it like that, but what we see today is that we have over $10 billion of hacks going on for just last year, right? We see that nearly every smart contract is today being verified by a team of auditors or a team of coders. And you know how it is, you won't find everything. It's just too cumbersome. So we basically built it around formal verification. So we're doing a couple of initiatives around this. So first of all, reference code, Dockers and so on our developer portal. Second of all, we just opened a school in Ghana to teach Haskell and to teach smart contract language there. We're building this EVM capability towards Solidity and other languages. We are teaching regularly and have strategic cooperations with universities. There's actually a university here in Zurich or in Switzerland where we're hoping they're going to spin up a Cardano node as a part of the education. So we're doing quite a lot, but we won't we won't lower the barriers, I would say it this way. We will try and educate us and encourage and incentivize us out of it.
All right.
That's it. Thank you very much for listening. I wish you a great day.
Thank you.